list of information that you have to provide to the freight forwarders and brokers for the quote. Lastly, this one is also important. You remember that we discussed the business number, so they have to know your export-import business number. Right now, about we're a financial institution. Export and import, they are very, very intensive products from financing perspective. So we most likely will be in the situation that you cannot finance the transaction out of your own budget. So where do you go in this case? Of course, you go to the financial institutions. Traditional institutions are banks, and I briefly mentioned that you have big 5 Canadian banks that are not that much friendly with importers and exporters. And we have HSBC International Bank. It's more friendly to exporters and importers. Now, if you are exporting, there's also Export Development Bank of Canada, but it's only if you're exporting. So the primary role of this financial institution is to provide the financing for the transaction. There is a cost, of course, of that. It's like, consider that as your line of credit. You pay interest rate anyways. If you're exporting, there's also an insurance component in that. Obviously, the other role of the bank is to be the medium of the transaction. So you don't just send money by post. You go to the bank and you wire the money to the bank account of your buyer or seller. Now, there's also obviously foreign exchange that provides foreign exchange as well. Now there's one specific financial product that I wanted to highlight, which is factoring. So factoring is very useful if you are, especially if you're exporting. Traditional banks don't do that, but the way it works that if you're an exporter, if you invoice your client, so the factoring company will purchase that invoice, they will give money to you, and they will deal with your buyer. So that's very useful if you...
That's the kind of insurance?
Say again?
That's the kind of insurance?
It's not really an insurance, it's a purchase. It's purchase of your... It's purchase of the debt, if you will. Yeah, but this is something that...
It's at a discount. Don't forget it's at a discount.
Exactly.
So your invoice is for 100, maybe they're only
yeah,
75 for it, because they're taking on risk.
That's right, that's right.
But what is the normal discount? What applied on that?
Oh, it's not something that is standard. They look at your credit history, they look at the credit history of the buyer, they look at the country risk and so on. It's individual for each case.
But generally, like it's how much discount?
There's no average.
5%, 10%, 20%?
No, there's no average. It cannot be the case.
It's expensive financing.
Yeah.
Yeah,
but
the
if
way
you need it.
Yeah, the way I'm especially putting attention because traditional banks they don't provide it.
What kind of bank?
No, banks don't provide this. There are specific factoring companies. If you just Google factoring companies, they will give you a bunch.
And there's some reputable factoring.
Yeah.
It's not illegal.
Oh, absolutely. And we had a question about letter of credit, right? So, letter of credit, you don't do letter of credit because it's a banking document. This is the bank who is doing letter of credit and exchange this document with the other bank, with your buyer's or seller's bank. So you're not really involved in that. You give the information for that, very detailed information, like the letter. If you use letter of credit, then you have to have a very, very detailed description of the goods. The reason why is because the other bank won't release money until the goods 100% match to the specification.
So it's between banks and then...
It's between banks, yes.
And then how the money comes?
Well, there are different kinds of letters of credit, but essentially the way it works that the bank on the one side issues the letter of credit while the product is going its way to the buyer. Now then, hang on. We actually should have a drawing here. Anyway, Let's say you're an exporter, like right?
Is it in Brazil?
You send it to you send it to Brazil, right? The bank opens letter of credit, right? And as soon as the shipment comes to Brazil, as soon as your buyer basically with the bank, with the representative from the bank inspecting the goods and sign off that yes, these goods qualify and confirm that yes, this is the goods that I expect, they are in a fine quantity and quality. As soon as that's done, then the bank releases the money and pays to the exporter. Something like that. Again, there are different schemas, but in the nutshell, this is how it works. This is very safe. This is a very safe schema because you don't risk that much until you just waiting for the confirmation of the bank and your buyer. But it's a bit of a time consuming, and of course there is a fee for that, a bank charge fee for that.
And the banks usually they usually do that.
Yes, they do. They do. Yes. In terms of letter of credit, yeah, every bank in Canada can handle that.